Welcome to the deep dive. Today, we're going to be looking at how emerging market economies are handling their monetary policy,
Mhm.
especially in times of crisis.
Okay.
So, EMEs,
Yeah.
our main source for this deep dive is going to be this really interesting research paper from the Federal Reserve.
Okay.
And you're not going to believe this, but it turns out that EMEs are becoming much more proactive
Yeah.
in managing their economies using something called countercyclical monetary policy.
It is a significant shift.
Right.
Indeed.
Yeah.
Historically, EMEs have been more reactive,
Ah,
often forced to tighten their monetary policy during global crises
okay.
to defend their currencies and manage capital flight.
Yeah.
But
Right.
this research suggests a major turning point.
So for those of us who don't spend all day,
Right.
looking at economic trends,
Yeah.
what exactly does countercyclical monetary policy mean?
In simple terms,
Yeah.
it means that instead of raising interest rates during a crisis
Hmm.
to stabilize their currency, which can actually worsen the economic downturn,
Right.
EMEs are now able to lower interest rates to stimulate growth, just like developed economies have been doing
Okay. So
for decades.
that sounds like a really positive development.
Yeah.
What was stopping EMEs from doing this before?
Uh,
Was it just like they didn't know how to use the tools or?
It's a bit more complicated than that.
Okay.
Remember, EMEs historically have had some vulnerabilities
Yeah.
that made them more susceptible to economic shocks.
Okay.
They often struggled with high inflation,
Mm.
relied heavily on debt denominated in foreign currencies,
Okay.
and had less developed financial markets,
Yeah.
which made investors nervous.
Right. And I remember from the paper, this meant that sometimes
Yeah.
raising interest rates, even during a crisis, was the only way to prevent like a full-blown debt crisis.
Exactly.
Yeah.
Tightening policy was often seen as a necessary evil, even if it meant sacrificing some economic growth in the short term.
Mm-hmm.
But what's fascinating is that this research, which looked at data from 188 countries, spanning from 1970 to 2009, found that EMEs have been steadily evolving.
Okay.
Over the last few decades, they've been taking steps to address those vulnerabilities and strengthen their economies.
So they've essentially been building up their defenses?
Precisely.
Okay.
They've been focused on getting inflation under control,
Mm-hmm.
building up their foreign exchange reserves,
Okay.
and managing their debt levels.
Yeah.
These stronger macroeconomic fundamentals have given them more leeway to act countercyclically during crises.
That makes sense. But there must be more to the story than just having a more stable economy.
Right.
I mean, developed economies have had those advantages for a while, right?
Right.
What else has changed?
You're right.
Yeah.
There's another crucial element here,
Okay.
and it's all about credibility and trust.
Okay.
The research highlights the importance of financial reforms, and specifically, the adoption of inflation targeting by many EMEs.
Now, inflation targeting is something that I hear tossed around a lot. But could you just break that down for us in a way that even I can understand?
Of course.
Yeah.
Imagine a central bank setting a specific target for inflation,
Okay.
usually a low and stable rate.
Mm-hmm.
They then use their policy tools like interest rates to try and hit that target.
Yeah.
This transparency signals to the world that they're serious about keeping inflation under control,
Okay.
which builds trust in their currency and monetary policy.
So it's like saying we're committed to keeping prices stable so you can trust us to manage the economy responsibly, even during a crisis.
You got it.
Okay.
And the amazing
Yeah.
thing is,
Mm-hmm.
according to the paper, no country that has adopted inflation targeting has ever abandoned it due to dissatisfaction.
Wow.
Seems to be a one-way door.
So we're talking about a pretty powerful tool here, and it seems like it's been a game changer for EMEs, allowing them to act more like their developed counterparts.
Absolutely.
Yeah.
This shift to countercyclical policy means EMEs can actually stimulate their economies during a downturn,
Hmm.
which has huge implications for their growth and resilience in the face of global economic shocks.
This is where it starts to get really interesting for me.
Right.
So if EMEs are now able to manage their economies more effectively during crises, does this mean they're less vulnerable to those shocks?
That's a great question, and it gets to the heart of what this all means for the future.
Right.
Let's explore that further.
So we're talking about EMEs being less vulnerable to these global shocks.
Right?
Help me understand what that looks like in practice.
Yes, sure.
I mean, what did these economies typically go through in the past when a crisis hit?
Well, think back to the Asian financial crisis of the late 1990s.
Okay.
When investors lost confidence in the region,
Mm-hmm.
they rapidly pulled their money out,
Oh,
causing currencies to plummet and economies to contract sharply.
yeah.
Many countries were forced to raise interest rates to try and stabilize their currencies.
Okay.
which unfortunately deepens the recessionary effects.
Right. So it was kind of a vicious cycle.
Exactly.
The crisis hit, they raised rates to defend their currency, but that made the economic situation even worse.
That's exactly. But now, with stronger fundamentals,
Mhm.
greater openness, and the adoption of inflation targeting,
Yeah.
EMEs have more options.
Okay.
Let's take a hypothetical example.
Okay.
Imagine a global recession hits.
Okay.
An EME central bank that has built credibility through inflation targeting might decide to actually lower interest rates
Wow. Okay.
to encourage businesses to invest and consumers to spend
Okay.
because they've demonstrated a commitment to keeping inflation in check.
Mhm.
People are more likely to trust that this move won't lead to runaway inflation.
So it's like they've earned the flexibility to actually stimulate the economy during a downturn instead of just reacting defensively.
Precisely.
Okay.
This ability to implement counter-cyclical policies could significantly change the trajectory of an EME during a crisis.
Mm-hmm.
Instead of experiencing a deep recession,
Yeah.
they might see a shallower downturn and a faster recovery.
That's a pretty big deal.
Yeah.
It sounds like this shift in EME behavior has the potential to reshape the global financial landscape. What are some of the broader implications we should be thinking about?
Well, traditionally, EMEs were viewed as the more volatile part of the global economy, more susceptible to boom and bust cycles.
Yeah.
But if this trend continues and EMEs become more adept at managing their economies through crises,
Right.
we might start to see them play a different role.
So instead of being the ones constantly on edge,
Yeah.
they could actually become a source of stability.
Exactly.
Wow.
It's not inconceivable that EMEs could become anchors of stability for the global economy,
Okay.
providing a counterbalance to volatility in developed markets.
That raises so many questions. I
Mhm.
mean, if EMEs become more resilient and influential, how might that affect global financial institutions like the International Monetary Fund?
Yeah.
Will we see a shift in power dynamics? Could this even lead to new forms of global cooperation?
Those are all excellent questions and ones that economists and policymakers are grappling with right now.
Yeah.
The truth is we're in uncharted territory. We've never seen EMEs wield this kind of economic power before,
Right.
but the potential is certainly there for them to become major players in shaping the future of the global financial system.
This deep dive has been quite a revelation. We started by talking about interest rates, and now we're contemplating a potential paradigm shift in the entire global financial order.
It's a testament to the interconnectedness of the global economy. Even seemingly technical changes in one part of the world can have ripple effects that are felt everywhere.
So as we wrap up this fascinating discussion, what's the key takeaway you want our listener to remember? What's the one big idea they should walk away with?
The key takeaway is this.
Okay.
Emerging markets are no longer simply following the lead of developed economies.
Okay.
They're becoming increasingly sophisticated in their economic management,
Mm-hmm.
and they're developing the tools and the credibility to navigate global crises with greater resilience. This has profound implications not just for their own growth and stability, but for the future of the global financial system as a whole.
And that brings us to the question we want you to ponder as we finish our deep dive.
Right.
What's that one thought-provoking question you want to leave our listener with?
If this trend continues, and EMEs become even more adept at managing their economies and weathering global storms,
Yeah.
will we see them transition from being recipients of aid and support to becoming the providers of stability and leadership on the global stage?
That's a question worth pondering indeed. And on that note, we'll wrap up this deep dive. We've covered a lot of ground today, from the intricacies of monetary policy to the potential for a seismic shift in the global financial order. It's been incredible exploring this research with you.
Yeah.
Who knew we'd end up contemplating the future of the global financial system just from diving into how EMEs handle crises?
It really is.
Yeah.
It's a testament to how interconnected our world truly is.
Right.
And how much potential there is for change and evolution in the global economy.
Speaking of change, it's amazing to think about how EMEs have transformed from being primarily reactive to economic shocks to becoming more proactive and resilient.
Yeah.
This shift to counter-cyclical monetary policy
Right?
is a pretty big deal.
Absolutely. And the fact that this research paper from the Federal Reserve shows this trend across 188 countries
Yeah.
from 1970 to 2009
Wow.
is quite compelling.
Right.
It suggests this isn't just a blip on the radar. It's a fundamental shift in how EMEs are managing their economies.
It makes you wonder what this could mean for investors, right?
Yeah.
I mean, if EMEs are becoming less risky and more stable, wouldn't that make them more attractive places to invest?
That's a very astute observation.
Yeah.
We might see a shift in global investment flows,
Okay.
with more capital being directed toward EMEs that have demonstrated their ability to navigate economic turbulence effectively.
And as these economies grow and become more influential,
Right.
could we see them taking on more leadership roles in global financial institutions? Imagine EMEs having a stronger voice in shaping global economic policy.
It's certainly within the realm of possibility.
Yeah.
If they continue on this trajectory of economic growth and resilience,
Yeah.
their influence on the world stage is only going to increase.
This deep dive has really opened my eyes to the evolving role of EMEs in the world.
Yeah.
We've gone from discussing the technicalities of inflation targeting to imagining a future where these economies are drivers of global stability and growth.
Right.
It's been quite a ride.
It has indeed. And it highlights the importance of staying informed and challenging our assumptions about the global economy.
Right.
Things are changing rapidly, and it's fascinating to witness these shifts unfold.
Well, on that note, we'll wrap up this deep dive into the world of EMEs and their remarkable evolution.
Okay.
Huge thank you to you, our listener, for joining us on this journey.
Yeah, thanks for listening.
We hope we've gained some valuable insights and perhaps even a new perspective on the ever-changing global landscape.
And until next time, keep exploring, keep questioning, and keep diving deep into the complexities of our world. You never know what fascinating discoveries await.